Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, June 6th, 2022. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. One thing you'll notice right here is the compression of price range over the last 5 and now developing 6 days. You'll notice right here from that high down to the low here from the previous Friday, we have ourselves a very compressed range. Again, this is a developing 6th day. The day's not over, and we could easily see a breakout at some point. But as of right now, we're trading dead center of this range. The midpoint is right around the previous session or previous month's close. And if you look down here, that's the quantification of the range right now. Just 54% of average, 161 points of range total over the last 6 days here, including today. And it's been averaging 284 plus points before that. So again, a compression that is very, very clear. You'll notice again as well, whenever you see a compression of price range and you increase in price range after a breakout, you tend to see a move somewhere toward the 125%. That's a 355 point potential move up ahead. Now, which way are we headed? That again remains up in the air. We've been trending downward for this entire time, and anytime we see a rally, it has been an opportunity for selling pressure to occur. This level right there is 4,100. That's a very important level. Again, prior support here, prior support. It was taken, offered, defended, and now we're trading right around that level. As I mentioned before, if price is able to find acceptance above 4,100, we may see a move as high as 4,300, which is the recent highs from May. That'll take us right to the previous month's high of 4,300, and it'll also take us into a declining yearly VWAP of 4,330. So that's the most bullish upside target as of right now, would be the 4,300 to 4,330 level if we get an upside break. But again, every time we see a rally, we tend to see some sort of failure of a breakout, and then we see some tremendous decline that follows. Think this narrow range right here, 1, 2, 3, 4, 5, 6, 7 day narrow range, a failed breakout led to a big outside day down, and then we got a flush to the downside. We've been seeing a lot of that here lately. We also had this narrow 4-day range, a failed breakout to the upside, and a drop. So again, that's what we're going to be looking for this week, is for signs of a breakout, and if there is a failure on that breakout, that could mean a reversal in the opposite direction, which from a bullish standpoint would mean if this thing tried to break down but failed, we could then use that failed new low and forecast higher about 335 points, 355 points, and that takes us, say, from 4,000, that would take us back up toward the 4,330 to 4,350 zone, right in line with this estimate. So again, as of right now, we are still range bound. We could still trade on both sides of the range or to either side of this range, and we could continue to develop this range not just for 6 days but 7 or 8 days until this thing is ready to see expansion. Today we don't have any economic data, so we could see further range bound action until proven otherwise. Again, we'll watch the edges for signs of expansion at some point down the road. Here's a look at the NQ. Again, very similar price action here. This one's more of a 5-day range, so we'll drop this down one notch. And again, you'll see here the compression of the last 5 days. Inside the range right now, precisely trading above and below the previous month's close price. Very similar to what we're seeing here in the ES as well. If you take the 13K level here, we're just below it. As I mentioned before, 13.6 is the upper end, 12.6 about right there is the lower end, and then you have 11.6 as this lower end here, so it's 1,000 point increments there. And if price is able to stay above 12.6, we have a shot to go up toward the 13.6 level, which is very similar to that 4,300 level, the top end of this range. You have a declining VWAP coming into play, just shy of 14K as well. So again, very narrow range. The potential here is for about 1,200 points whenever we do see a breakout. So again, if we see a failed breakout to the upside, say at 13.2, then we could be looking at a 1,200 point drop, which takes us to, say, 12K. Vice versa, if this thing breaks down and fails at 12 at 12.2 here, we could be looking at a 13.4 type of rally, which puts us right to the upper end of the range. So again, until proven otherwise, we have a range-bound market here where you're likely going to look to fade the edges until this thing is ready to see significant expansion. Taking a look at crude oil. Crude oil is currently seeing a pullback here after a tremendous rally over the last few days. It's gone from 111s to 120 this morning, taking a bit of a gap up, or overnight trading here and a little bit of a pullback. The best level to watch here for a bounce is going to be the 118s. So you had 2-day highs here, you had the breakout with the stop run day. That's the previous session's midpoint, and now right here in the 118s we're looking for signs of rejection. We're starting to see already an initial bounce off that zone right now, and if bulls can continue to defend 118s, we could be looking at a positive finish back above the 120 level by the end of the day. Again, the idea here is that based off of the strong low we saw Thursday, we could be looking at a continuation this week that takes us between 126 and 131 as an upside target zone by the end of the week. So again, 118 is the level to watch here for a bounce today. If bulls can keep that bid, we could finish bullish, and then again looking for check mark trend days up until we reach the primary target zone up ahead for crude oil. Looking at Bitcoin right now, Bitcoin's up 6.4% right now, still inside that major range. Again, this market has been very, very difficult to get things going to the upside since that disastrous April-May time frame. It's been a significantly weak market here, getting as high as about 49K and then dropping basically in half over the course of about 5 to 6 weeks back toward 25K. We've now since sat on the 28K level for quite some time, building this narrow range. At some point here, something's got to give. Above 32K could open up 38K. A failure at 28K could open up as low as 18K down below. So again, this thing's building some significant energy. At some point, we may see a release of that energy. Taking a look here at Ether futures, this one's up 9% here today. Again, barely holding on to the 1700 level. 1700 is such a significant area of support. One thing you'll notice here is how bearish the PIMA trigger zone is. Every time it gets into that level or above the 8-period average, it tends to get shot back down. We're above it right now, and again, barely hanging on to 17K. If this thing were to fail at 17K, there's clear air below that could take us as low as 900, which is the 100% extension of this key range. So again, triple digits could be around the corner if this thing can't hold 1700 down the way. Additionally, if for some reason we're able to push back above the 2200 level, there could be an opening back toward 2600. So again, that's kind of the range right now, 1700 to 22 as of right now. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.